Brilliant. Good afternoon, everybody. Welcome to Stream's webinar, Introduction to Analysis 102, Part 1. I'd like to just jump right in early here, introduce myself. My name is Richard. I'm sitting next to Nictadios. I'm guessing some of the participants are familiar with Nictadios. I work alongside Nictadios here in Streams. The first thing I wanted to start off with is actually a proper introduction to Streams, who we are, and what we're looking to achieve in the market. Streams is a fairly new broker. We're a non-dealing desk broker. We are looking to make sure that we give a clean onboarding process. We want to make sure that we have a proper deposit methods and obviously proper withdrawal methods. I believe that this is probably about 50% of what the problem is in the Forex market. It's the ability to onboard a client, and then second, be able to receive a deposit, and third, be able to actually receive that deposit back via withdrawal. Okay. One thing that we're very committed here is to perform all three of those tasks with speed and accuracy. Okay. So that's a very quick nutshell on Streams. We're going to jump right in now. A broker with personality. Here is our website. It's gostreams.io. Our Facebook page being www.facebook.com/streamsfxofficial. You might just be able to put StreamsFX official in there, and you'll see it. And then obviously you can find us on LinkedIn as well. Okay, so now where are we? We're going to jump right in here. Fundamental analysis, news, and correlations. First, we'll focus on fundamental analysis, and then we'll focus on technical analysis in part 2. You know, there's something that I think about very quickly when I think about the markets. And when I think about the markets, just so everybody knows, I immediately think about fundamental news. What's fundamental news to me is something that's pretty simple. It's something that you see on the TV, Bloomberg, possibly on an internet search, etc., etc. I personally believe, it's just my opinion, this is what moves the market more than technical, okay, or more than sentimental analysis, okay? The news, rumor moves the market. So that's fundamental analysis. There's 3 types of Forex markets analysis. As you can see here, technical analysis, fundamental analysis, and sentimental analysis. Sentimental analysis, just so I can give an example to somebody, I have an Apple iPhone in front of me. Sentimentally, I'm attached to Apple. Okay, sentimental analysis. Technical analysis, this is when we try to confuse everybody and get them in front of graphs and lines and trends and pips and this and that. That's your technical analysis. And then back to what we started with at the very beginning, fundamental analysis. Fundamental analysis is the moves in the market, okay? And that comes off of news, media, this type of stuff here. What, you want to go up and look at this? Okay, here, technical analysis, the study of currency prices movement on the chart. Fundamental analysis, take a look at how the country's economy is doing. Well, ish. Market sentiment analysis determines whether the market is bullish or bearish or the current future fundamental outlook. Again, my side of it, I'm going to take a very small amount of technical analysis. Most likely will come from relative strength index, RSIs. Second, I'll add in my fundamental analysis, and I promise you, just like any other person in the world, I will have my sentimental feelings towards whatever I'm purchasing, whether that be oil, gold, Apple, Euro USD. Okay, I'm skipping some of this. Reaction to major fundamental factors shape currency price movements on a daily basis. Examples, oil prices, gas prices, dollar sentiment, exports, imports, gross domestic product, blah, 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 blah. Okay, we know what it is. Moving on. There are many ways of gathering fundamental economic information, reading or watching the news, social media, economical calendars, okay? 3 stages of trading the fundamental calculation: speculative traders, sentiment trading, and reversal or retracement trades. Okay, here we go. We're gonna get right into the confusing part with all the graphs and this and that. Okay, I do not want anybody to feel overwhelmed at this part of the presentation. It's really important for everybody to understand that if you are listening to this webinar, we are here to help. We're here to help in whatever way we possibly can. So feel free at the end to have a small, quick Q&A, or feel free to send us an email If you can't catch us by email, you want to get us off of social media, please feel free to find us through social media contacts as well. What I'm gonna do is I'm gonna pass this over to Nictarius because he's really itching to talk about all the graphs, all the really fun and exciting things that we have here to offer. I just want to make sure that I do leave it on this note. The most important thing for me is the safety of funds for anybody that's working in this company, working with the company or working in the company. This is what's important to us. And I can only hope and wish the next webinar we do, you'll actually be able to see my beautiful face say it. Okay, as well as Nictarios, he might be a little bit more handsome than me, but I'm a little bit more competent. So I'll pass it over to Nictarios now, and I wish everybody a wonderful day. If you have any cares, questions, or concerns, again, feel free to reach out to me. Hold the line.
Hello, everyone. Welcome to the webinar for Introduction to Analysis. Thank you, Richard. That was a great introduction about our company. Guys here, everyone here that works at Streams is great. We are looking after everyone, and I believe we're doing a good job, and I can see it from the trading activity of a lot of our people that are trading even at this moment. So as Richard did mention, he doesn't want to overwhelm everyone. We don't want to overwhelm everyone. Trading is actually, you need to keep it simple. The simpler you can keep it, the better you can perform. You do go into more detail as as you progress, as you get more experience. But Richard did cover some important factors of fundamental analysis. We're going to mostly focus on fundamental analysis. So this is what we have today. I mean, fundamental analysis is the study of social, economical, and political forces that influence an economy, which in turn influence the rate of the specific instrument attached to that economy. Now, with fundamental analysis, it basically represents on how well or how bad an economy is doing, if the economy is growing or contracting. It's a very important indication on what's going on in that specific economy. So fundamental factors shape sentiment, while technical analysis helps us visualize that sentiment and apply a framework to create our trading plans. Okay, the three analyses work hand in hand to help you come up with a good direction of the markets. Now, market sentiment, okay, it's what Richard said. It's basically a preference. It's basically how the market feels on specific instruments. It has to do a lot also with demand and supply. If you have a high demand, say for example for gold, then of course that demand will drive, of course, gold, the price up. If you don't have a demand for gold, this will drive, of course, the price down. This is basically what market sentiment is, and it is very important to trading, though it is the most difficult type of analysis to study. Fundamental analysis and technical analysis are the two types of analysis that we can study, that we can have a good understanding of them. The third one is the only one that will be lacking. So when you're trading, you do have a higher probability of being successful when you're doing both types of analysis, technical and fundamental. Now, fundamental analysis, as I told you, represents the health of global economies, okay, growth or contraction. It has to do a lot with injections and expenditures for an economy, and it also, more importantly, leads to trading opportunities. Okay, fundamental analysis is what Richard also said before. It's what actually moves the markets. Technical analysis, though, gives you a solid foundation on where your entry points are and where your exit points are. Okay, with technical analysis, we'll go into that in the next part, in the next webinar, where you guys will get to understand a few things about support and resistance levels, where it will help you to understand good entry levels and also good exit levels for your trades. So a reaction in major fundamental factors shape currency price movements on a daily basis. So oil prices do also influence currencies. A lot of it we'll cover now with the Canadian dollar. Go forward. With the Canadian dollar, with oil prices, you'll see what I mean. Gold prices will influence also the price of US dollar, Swiss franc, and we'll continue further down with correlation so you guys can understand better how these important factors do influence currencies as well. Now, we mentioned this already with fundamental analysis, what it is. Okay, reading of economic calendars.
Just sorry to interrupt you. I'm sorry to interrupt you, Natalia.
Sorry.
Please forgive me.
All right.
I want you to explain to them who you are and what you do more than the fundamental analysis. Why don't you explain to them who you are and what you do specifically?
So, okay, guys. So, well, reason why we're actually covering a lot of these things is I do have a lot of experience in the markets. I have been in the markets for 14 years, and I've seen a lot of people's trading activity in the past. And I know for a fact that the majority of people that are successful are the ones that are following a combination of analysis. Not just fundamental, but also the combination of technical and fundamental. And if they can throw the sentiment in, even better. Now, understanding these things that we're doing today will help you. And I know for a fact, because from my own previous experience, I've seen great success by following all types of analysis, and I've seen it through the majority of the traders that are following also these type of analysis.
And what about the IB program? How does the IB program fit into your life?
Okay, so Richard is basically asking guys about the IB program that we have here. An introducing broker is someone that does refer someone else to streams. Now, this IB does need to put a bit of an effort where they do need to help the referral in the sense where they are able to help them register. They are able to explain to them how things work with the charts.
Social copy trading.
We will also, on our streams website, we will also going to have what we have social trading, copy trading. Basically, we'll have a number of our best traders there. From those best traders, anyone is able to choose and select which trader to follow. And in the process, they don't have to do much of the analysis. They just need to copy whatever the trader, the individual there you're following, is doing. So,
and what about if I actually don't want to trade and I want to be in a managed account? Do you offer that?
Well, Rich is asking if we do have managed accounts. A lot of you probably know that we are working with a great company called Mayfair Brooks. Mayfair Brooks is one of the best brokerages globally when it comes to portfolio management services. They do handle our streams global markets accounts. They manage them where people do not even have to click anything. They don't even have to analyze anything. All they need to do is just monitor how their accounts are doing. So Mayfair Brooks manages the account from top to bottom for you, and every month you can see a return. But again, whoever is going with a Mayfair Brooks account, I do specify to at least keep it for at least a year. If you guys want to see some good returns, a year should do it, and even more than a year is even better. Having your Mayfair Brooks account just for a month or two, I don't think that would be beneficial. I mean, you will see returns, but it won't be as great as having it for a year or 2 years or 3 years. So we'll continue also now with what we're doing.
And we also want to be able to make sure that we're leaving a little bit of time at the end for Q&A.
Yeah, Richard is specifying, guys, if you guys have any questions, do throw them out there. You should see a chat box on the side, on the right side of your panel. So any questions you may have, you can also either email us at webinars@gostreams.io as well. Any questions that you may have. It's good to have questions. The more questions you have, the more you can learn and understand things. So this here, what we're seeing right now on your screen, guys, is basically a chart, okay, on what happened with a specific event, a fundamental event or fundamental calculation as we call it. But before going into that, with trading the news, okay, there's three stages in trading fundamental calculations or news. One of them is called the speculative trade. The other one is sentiment trade and the reversal retracement trade. The speculative trade is basically a trade that you take just before the event happens. This could be a few minutes before, it could even be a few hours before. It's what I like to call pre-market trading, okay, just after the news. You usually have some kind of movement just after the specific calculation. And I'll get more into the economic calendar and the calculations that you guys can find. Sentiment trade is basically you're following the sentiment on how the markets are moving in accordance to the news release that just occurred. So you're basically trying to follow the markets. It's like following the sentiment, as we say, as we explained before, sentiment trading. but we should always be aware that what goes up must come down and vice versa. So we do have the reversal retracement trade. Now, the reversal retracement trade, a lot of people consider it a bit of a safer trade. In my opinion, it's not as safe as the sentiment trade. The most risky one from out of all of them is probably the speculative trade, though it does give you the highest rewards due to that you're opening your trade just before the big move. So price movements do occur even before the announcement, during the announcement, and even after the announcement. It's just a matter of catching it at the right time, at the right levels, and executing your trades correctly in the right direction. So before the report, as you can see, the market's consolidating with tighter ranges until the report is released, as many traders choose to not take a position during the speculative trade. In my opinion, it's good to take the speculative trade. You just need to open your trades a bit of a smaller lot rather than take it at what you usually would take a trade on. It's better to open it on a smaller lot, put your stop loss, play it a bit safe, and see what comes out, because I've seen traders make a hell of a lot of money just by taking those speculative trades. Sure, they take a risk, but the rewards are much higher, guys. So if you open your trade, say somewhere around here, basically you will see that if you're selling and the price of what you're trading does come down, then you'll see a big move. This is the price action prior to the US employment report. The US employment report, we do have even today an employment report, and I'll get into it as well, showing you guys the economic calendar. This is basically the price action movement after the US employment report. And as we can see, this is on a Euro USD, which the employment report must have been good in this scenario, because we see that the Euro USD came down, meaning that the US dollar strengthened. So it does always pick up speed after, guys, after the result does come out. You will see some movement before, but after you'll see more, and then you'll see the retracement. Now, this is a good example of also a retracement. You can see here, this is the reaction of the Euro USD from the Federal Reserve speech that causes an aggressive downward move, and then you have a reversal going back up again to where it nearly started. So when you have these news events that come out, you usually have some kind of reversal reaction after a while. It depends on how big the news is for it to reverse. So if you have some kind of big calculation, the big impact on a specific instrument, it may move down not just for a few minutes, it may even move down, say, for a few hours, and then you'll have the reversal. It always depends on how big the news is, and how big the news is also will have an influence on how big the move is as well. So this is what we call the quick and the dead. Okay, NFP is the employment report in the US. Okay, non-farm payrolls come out every first Friday of every month. It is one of the most important calculations, especially now that we've seen also with the pandemic. Okay, even the pandemic that happened is fundamental news. Okay, it did have a major impact on a lot of instruments, and I'll elaborate on that as well on some of our graphs, and I'll show you what I mean on how the pandemic did influence the markets a lot, and we'll see some gaps as well in crude oil, US dollar CAD, US dollar Swiss franc, and gold. These are the ones that I'm going to be showing on my chart in just a while. But you can see that sometimes, okay, when you have some news releases like the NFP, as I mentioned, the employment change in the US, you see an expected jump upwards at the beginning. Okay, but this is because the NFP comes out worse. Okay, it wasn't a very good calculation. There are less employed people. In turn, we see Euro USD rise. This is because the US dollar is weakening, but all of a sudden we see the market sentiment pulls downwards the Euro USD, and we see that the US dollar actually strengthens. This is because sometimes you have other calculations that come out. Those calculations that came out with the NFP may have been positive, even though the NFP may have been worse than expected. You see that small rise there, and then you see a massive drop. This is also because the market feels like they want to basically sell that euro. They don't feel that the that the euro should be rising, so they're all selling Euro USD. So we'll get back into correlation. So I'm just going to show you now something with our graphs here, which I think will help you to understand. But before we get into it, I will show you also Stream's economic calendar. So economic calendar, if you log into your portal, guys, and you click on economic calendar right over here, all right, you'll be able to see Stream's global markets calendar, which is also from TradingView. Okay, TradingView, we're working with them as well, and they have supplied to us basically their economic calendar. So each of these fundamental calculations here are basically, you can click on each one and basically discover what each one represents. Okay, average weekly earnings. If you click on it, it'll explain to you average weekly earnings, and it'll explain to you also statistics. This was what actually came out on Tuesday, if I'm not mistaken, for the British economy. Even though we had a positive result on that one, we had some other negative results that actually did pull down the British pound, as we saw on Tuesday. Yesterday was a good day for the pound. Today, it's not so good for the pound as well, due to that they're in talks with EU, and there seems to be a no-deal Brexit for the UK, which is having a major impact, as we've seen on the British pound today. We'll just see this drop here today from up here, has come down here, it's touched the level and is going back up again. This is because it's reached a level. We see something of a tweezer pattern here with a bearish and bullish candlestick, which might represent that it might start heading up, everyone. We're not 100% sure because the Brexit deal negotiations are a big deal, so we don't know if it will rise 100%, but what we do know that it's reached the level, and it's a good time to actually see on how things will react. So going back to the economic calendars, guys, there are many economic calendars out there. Streams does supply one from TradingView. Okay, you can see here, this is TradingView. So a lot of information you guys can gather also from TradingView. I would recommend that you guys check them out so that you guys get a bit more confidence when you're trading as well, a bit more knowledge. We have other great calendars like Forex Factory, investing.com. Okay, this is basically investing.com. I prefer to be using mostly investing and TradingView. Okay, these are ones I know them very well. Investing does have updates automatically. You don't need to refresh your page. And by going on each economic fundamental calculation, and you click on it, it'll give you basically what each calculation represents. You have the previous, forecast, and actual. Okay, very important stuff. It's good to know what happened in the previous month or week. All right. Forecast is a forecast that the analysts give, and the actual figure comes out at the time it's supposed to. So do make sure that you arrange your time to be at your current time, so that you know when each event is happening. You should be looking at your economic calendar at the beginning of each week, either on a Sunday evening or on a Monday, to know what's happening during the course of the week. Today, at 3:30 my time, do check your times, guys, because I am on GMT +3. Okay, so 3:30 my time. There is news in the US, absolutely. It's initial jobless claims, which is very important, as we know that COVID has hit also the US very hard. We know that a lot of people are struggling with work at the moment. We have Philadelphia Fed manufacturing, which is, again, quite important news. So the ones that have 3 stars or that are highlighted red in some cases, okay, like here we have the important calculations in red, as you can see. Yellow are not so important. Orange are medium impact on the specific economy and the currency that they represent. Here it's with stars, 3 stars, 2 stars, and 1 star. So you need to play around with the economic calendar, guys. If you want, you can check out Stream's Global Markets Economic Calendar just to get familiar with how to use the economic calendar. So going back to correlations, guys, okay, we do have a lot of correlations between specific currencies and commodities. Global commodities such as oil, steel, and copper play a large role in the flow of global capital and international trade. So moving on, you guys can see of USD CAD as it's dropping. We see that oil is rising. So USD CAD dropping means that the Canadian dollar is strengthening. In this case, we have a rise in crude oil. So bear with me and you'll see, viewed as an ultimate safe haven in times of economic uncertainty. Okay, this is for gold. Gold is a safe haven, of course, for all currencies and all commodities. It can provide an insight into trends in Forex. Rising gold often indicates an increasing lack of confidence in the US dollar. So usually when you have a rise in gold, okay, usually you see the US dollar declining. In this case today, we saw that the US dollar was rising. We saw that gold was declining. You guys can actually get a view of this as we have CHF, okay, the Swiss franc. Today we did see a bit of a rise right over here, and we saw that gold did come a bit down right over here as US dollar against the Swiss franc was rising. Gold was actually coming down, and now you can see that US dollar Swiss franc is coming down, gold is rising. Okay, this is okay. So guys, I don't know if you can hear me, if you guys can see also the correlation between gold and USD CHF. Gold, as I mentioned, when it comes down, US dollar Swiss franc usually goes up. Here's a chart of US dollar CAD going down as our previous example. Crude oil rising and gold also rising. Okay, gold and US and Canada, they have strong correlation between each other because Canada is also one of a major exporter of gold. So is Australia, so is the South African rand. So usually when gold rises, these ones also rise. So if you guys have any questions, just write them down in the panel. Okay, you guys should see or raise your hand.
You can also turn on your audio.
We can also turn on your audio.
Turn on the audio. Here, audio. Click on the audio.
So if you guys have any questions, just let me know through the panel or just write to us on webinars@gostreams.io. This would actually help to identify your questions and answer them. So we've covered basically a few things with the economic calendar, guys. Okay, the economic calendar is a vital part to trading, but you guys also need to read the news. Those sites that I did mention before, TradingView, investing.com, Forex Factory, Streams Global Markets, we all are great at actually presenting information. So I see here that we have a question from someone. So
Richard.
yeah, with Richard Edon.
If you want, go ahead and type.
Yeah, you can type the question if you want, Richard. We can see your question. So, Richard, we can actually hear you now. Richard, if you can speak through a mic, we can actually hear your question. Okay, Richard, we can hear you. If you would like to tell us your question, you can actually answer it. Okay.
Well,
so no worries, everyone. Thank you for joining. All right. Any questions you may have regarding what we've just covered, let me know. We will do more things, obviously, more webinars coming ahead on a lot on technical analysis as well. Any questions you may have, just communicate with me and I'll answer whatever you guys need. All right. So have a great one and many successful trades to everyone. Thank you.